following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys had a good weekend. The Paris situation, we got to take some serious measures, in my opinion. Use those guys as target practice till there's no one left. All the experimental military weapons that we've always been wondering how they'd work, we need to try those out right now. This is my opinion. Global markets, really, not a lot of activity relative to that event. Let's take a look at the things going on overseas with the Shanghai really quick, because this is what we want to take a look at from the no chart. Let me just make sure we got our chart. Technical difficulties again. Here we go. All right, so we're taking a look at the Shanghai. The usual suspects, exactly. Already a pretty good start to the week, pretty good reversal. Okay. You guys still aren't seeing it. I tell you what, we're gonna talk about the S&Ps as quickly as we can. We just want to run through a couple of other things first. The upgrade, I was going to mention that, Jim. Got some guys working on the installers right now for that scanner that I showed in the webinar. Found a couple of things we wanted to change for your benefit, of course. So just waiting for the programmers on this one. We're going to send out an email. In fact, I'm going to send out an email. Yeah, Jim, I'm looking forward to getting it to you. Let me get rid of a couple of things for Al on the technical side, guys. Sorry about this. Starting the week, Monday. That's done, Al. You guys see the chart? Yep. Nobody? No chart? Got it. Cool. All right. So, to finish up talking about the scanner, this is... Let me show you guys something on the scanner. Let me wait for this to populate, and we'll talk about the Shanghai first. Isn't it amazing how cheap these TVs are now? I was trying to get our scanner in the background there because I use it constantly during the trading day. And I have another TV hooked up to my kind of grid here in front of me. Bought a 32-inch TV this weekend for $129 with 1080, the HD 1080, and the remote control for that TV controls this one. I got to shut off one to do, make the other one work or whatever, do what I want to. But $129, you can hook it up with an HDMI cable to your laptop and 32-inch TV. Amazing how these things have come down. That's cheaper than a monitor. Like a 20-inch monitor. It's amazing. Anyway, Shanghai. We have a caller already. Well, let's finish with Shanghai. This is the weekly view on the Shanghai. We had that 3312 area. Here's the daily. We had a new profile attempting to appear. We talked about that last week. We're going to have some new inflection points. So today, 35.34 is now new intermediate support. Now you've got some things you can hang on to. We had a little bit of a profit-taking event with that yellow bar, and that was reflected in the scanner. But right now we've got new targets up top, 36.73, and stops below on 35.34 on the Shanghai. I think we've got Dave from Clearwater. Dave, are you with us?
Morning, John. How are you, sir?
Doing all right. Having some technical difficulties on Monday morning, but other than that, doing okay. Hope you are also.
Oh, yeah. Well, you don't have to hope. I am having technical difficulties on Monday morning. There's no hoping about it, John. And, I was listening to your opening comments, and as a former veteran of the 82nd Airborne Division, I agree with you completely. Going to blow them to the Stone Age. But
I know.
anyways, it's nuts, man. It's so insane. Anyways,
So
but,
you were in Bragg down here?
yes, sir.
Man, I used to live in Fayetteville.
No kidding.
Yeah,
Vietnam,
back in
lived there, huh?
when was this? Back in the early '90s.
Uh-huh.
Yeah, and it was a fun place to live, to be honest with you. How did you like your experience down there?
Well, I spent a lot of time deployed.
Okay. Right. Yeah. Okay. Yeah. Gotcha.
Yeah. I spent a lot of time, living in the field. The Army, I believe the Army calls it maneuvers. But anyways, no, Fort Bragg's a major installation. It's a huge base. Huge.
People don't realize that's literally a whole county. I mean, you drive onto that. Yeah, you drive onto that base. You literally can get completely lost in the woods, and it's
I don't
huge.
think most people realize how big some of the military installations are in our country. I don't know if I'm going off of memory, but if I remember correctly, I want to say Fort Bragg's around 3,000 square miles, something like that.
It's incredibly big, huge. And most of it's kind of cryptically, it's not just buildings everywhere. It's kind of you get in a Humvee with a couple of guys that know the landscape, and you can get lost out there. And
you can get lost, and well, it's a huge training range too. It's one of the major training ranges in the United States, and you think you're out in the middle of the sticks, and you think there's nothing out there, and you turn down this little dirt road, and next thing you know, you come across this major installation you didn't even know existed. Yeah, for sure. Hey, thanks for taking my call, John. I'm trying to wrap my mind around this. I signed up just as a curiosity for your webinar, and I wasn't able to make it, so I was watching the archives. Is it really, and I'm forgive me if I'm oversimplifying it, but is it really truly just a, when you're looking at the breadth profiles, when on any given time frame, when the red line crosses above the green line, that's an indication to short. When the green's above the red, that's an indication to go long on any given instrument based on that given time frame?
That's a great question. There is some, there's a learning curve to that, and what we want to do is make that learning curve like next to nothing as far as time frame that you have to actually spend on this. This is such a good question. And I want to explain this. Can you possibly even stay through this next break, because this may take a little longer, and I think everybody's than 5 minutes, and I think everybody's going to benefit from this.
John, I appreciate your time. I'll be happy to stay on as long as you want to talk to me.
Okay. All right. So Dave's question really is it as simple? And I'm going to pull up the. Let me install this latest version of the scanner that the programmers are working on to get you guys today, which has all those kind of extra features that I showed. Give me 2 seconds to get this up. And then I'm gonna, here we go. Okay, so while that's waiting to come up here, the question again is, when the red line's above the green line, do you just go short blindly? When the green line's above the red line on the breadth calculations, do you just go long? Those are, obviously they have 4 time frames in the scanner. We have 4 time frames in the scanner. And I'm going to pull this up really quick. So when you look at these odometers up top that I'm showing in the den, we talked about this a little bit in the webinar, but the 60-minute crossovers are really for the day traders. And when we're red above green, that's a system in itself, but you always have for shorts, but you always have to be aware of what's going on with the index futures that you're looking at. And that breadth is a calculation. I think we've got it on 17 different indices right now. And this scanner is not going to update every microsecond. It's set to update every 60 seconds. Sometimes it will extend out to like 2 to 3 minutes based on market activities and the restriction that eSignal really going on in the background really kind of handicaps us a little bit. So, but I don't, we never built this as a, what do they call it? High frequency trading piece of software. This is to give you edge and hopefully leverage on trading the index or finding out the bias opinion of the index and then drilling down into the individual stocks to try to, make some sense of who's showing their hand and all the other things we talked about in the webinar. And please watch that webinar if you guys have a chance. I thought we covered, quite a bit. There's a lot in this piece of software, but going back to the breadth, here's my S&P, and let's just focus on the S&P breadth and the 60-minute. I'm going to go into my landscape view, and I'm going to notice that I have major inflection points at 2045. That's my weekly unfair high, and that's going to be now that the weekly breadth has turned negative, and we've got pre-market activity working in this now, which is kind of cool. I've got an inflection point above 2063 that we were able to pick a battle before, and then that failed. 2045 didn't hold at all, which I was kind of amazed at. Now we've got 2017, also the bottom of a 240 profile. So I've thrown out a lot of numbers. I know we've hit 2,000 this morning. That whole number, we've bounced up quite a bit. To answer his question, when you're using the 60-minute crossovers, you need to be aware of those major inflection points that are on the index itself, because those are going to be either resting points, targets, possible, reversal areas. And, those are kind of lines in the sand or inflection points that always have to be adhered to, because the raw index itself, and I'm going to go to my S&Ps right now and try to, make a complete statement here in summary. But as I look at that 2045 on the index, I gotta realize that my long-term breaths are at the very least a little mixed up right now. I personally look at the weekly and daily a lot on the breath side to give me the long-term market bias, because I'm trading on my particular time frames on a little bit longer term time frame, and I'm looking at these longer term inflection points. Do I do some day trading? Absolutely. But I kind of wait until these long term inflection points are approached, or at least breached, or maybe touched. So 2045, if the 60 gets positive, and remember, when the VIX gets high, you kind of got to drill down into these lower term breaths. And when we come back from break here, Dave, I've said a lot. I'm going to try to get a little bit more focused to answer your question if you can hang around.
Thank you, John.
Okay.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Dave, you still with us? Hello?
Yes, I am. Hello?
Getting to before is the 60-minute. You can look at it as just obviously I'm showing on the screen right now, but on 11:11 we had some choppy versions of the 60, and I've kind of blown this up, and I've taken out the middle ground here. But as you can see down below, what we did is we put a price chart of the S&Ps down below, and we, because of exchange, you guys are getting, in my opinion, a great situation here with not having to pay exchange fees and actually getting real-time price derivatives. We're also showing a little bit of a historical chart on the S&Ps down below. And you can see how these, things finally kind of started tailing off and falling off. But the question is, if you guys are joining us late, can you just use these crossovers, red above green, green above red, to trade the S&Ps and to get some market biasness? Yes, you can. But what I was saying is I like to be aware of those longer-term inflection points on the chart. And let me just kind of go back to this. And we mentioned 2045. Here's the daily situation. Nothing down there really. Here's the the kind of the shorter term inflection points. If you guys are focused on trading futures here, 2017 50, and then up top 2041 and some change, and that is very close to 2045. So the big numbers that are available today are 2017 and 2041, 2045, that little DMZ up there, as I like to call it, where 2 front time frames are very, very close. Now, what does that mean? Right now, because a lot of the stocks haven't opened, Dave, this breadth chart, and we had a question about this, is totally dependent on the internals of the S&P 500. Now, that's a we get that those internals, real-time data feed to produce these derivatives, so a lot of these stocks at whatever 8:25 in the morning Eastern time haven't opened, and this breadth calculation, we're starting to bleed in pre-market numbers, but a lot of these stocks haven't opened, so a lot of these breadth calculations are really still based on Friday's close, because we just don't have any new information to change it, even though, are we up or we're up right now, right, on the S&Ps? Yeah, we're up for about 2 or 3 points. So it's no big changes are going to happen here really in the breadth until we start getting some north movement. Now, the other thing is, when the VIX gets high, and I'm trying to explain all this, and then I will promise you I will come back to a decision here for you. When the VIX gets high, a lot of these profiles will widen out on every time frame. So, like if there's a new profile being emitted, then it's basically saying the balanced area, which is the area between the red line and the green line on the profiles, that's going to get wide, and therefore there's going to be a lot more room for error. Let me redo my chart here. I think it went down. Are we back up? There's going to be a lot more room for error and a lot more lag time because the fair auction has increased in size. All right. I know you're going, well, it seems like you're giving yourself a million ways to be right and wrong here.
No, I'm following you, because from what I've seen, just to give you a little bit of my background, I'm a mechanical engineer, so I'm good at math. Okay. I mean, basically, it seems to me like the fair auctions is the majority of the volume price movements for a given time frame, with the fair price, and the unfair high, unfair low being one deviation up or down off of that calculation that you're running. So I'm with you on that, but
what's the system? That's what you're asking, probably.
Yeah, I mean, because I've got my own system, and I was watching this, and I'm intrigued by it. I'm like, maybe this could just, be something I would like to, add to the game here and tell some of my trading buddies that I talked to.
Hey, you know what, Dave? Can you please stay on after this break too? Is that possible?
John, I'll talk to you as long as you want to talk to me, man.
This is great questions, and I want to answer all of them. What you said there was really, really important, and I speak in front of a lot of people a lot of times in different cities globally with Bloomberg, and the first thing I tell them is like, you guys probably already have a system. You can't be sitting in this room just blindly throwing darts at the board. This is a great, if nothing else, this is a great enhancement to give the tide of the marketplace kind of biased opinion on top of an existing way that you're looking at the markets already, because it will slow your trading down to produce, in my opinion, more, high probability opportunities. And when those opportunities arise, you've got, in my opinion, a lot of times better risk reward scenarios sitting in front of you. Dave, you can hang out. We'll be right back, and I want to just keep talking about this because they're very important questions.
Thank you.
Okay.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. I think we still got Dave on with us.
Yes, sir.
Cool. All right. Yeah, so what I was saying is, a lot of you guys might already have a system that, is working well. And, this is something, slowing trading down is not the worst thing in the world. I mean, the statistics are that the more often you trade, I'm talking about guys who really get, pounding the keyboard all day long, there's not a greater chance that you're going to really make more money by trading more. So this is a system, if you're using something else, it might be another layer of confirmation that you kind of have to wait for. You can't do that forever, but this is something that might actually be a great overlay. So that would, in my opinion, be good, Dave, because I fully believe in this, and this really gives, I know this, and we've done a lot of back testing with this on every time frame. It really does give, good changes in the tone or the tide in the marketplace. I want to give a case in point here because we talked about index inflection points to be aware of, but I'm going to go back to 10-2. It was kind of the recent upturn after that big sell-off. And by the way, I'm looking at our dailies right now, breath changes. I've just kind of killed the middle ground. Now there's a way to kind of esoterically read that middle ground as an edge too, and I want to, this is something we'll talk about tomorrow, I promise. But but just the simplicity of the crossovers. We had a little bit of a noise there. I mean, this is our daily. We had a pretty big crossover there. Now, the crossover that happened, and we had some noise little situations before there on the daily. And we had some good trading opportunities from the long side. I remember back in the middle of August, we were kind of sitting on some of those inflection points. I think it was around 2060, 2065 on the futures, 2060.
John.
Yes.
Sorry to interrupt, but I just want to make sure I understand your definition of inflection points. When you say are you talking the actual mathematical definition of change in slope on the green line or on the red line? Is that what you're calling an inflection point?
Yeah, what I'm calling the green line and the red line. I mean, you hear the term inflection points a lot on TV these days. It seems like to be the new. I've actually got a graduate degree in math, Dave, and I definitely, you got a mechanical engineering degree. We know what an inflection point is. You're right. It's an area where things could change in layman's terms. It's like you just said, like a slope change possibility. Kind of a demarcation line, if you will.
Okay.
The red and the green line the inflection points that I'm speaking about are the red and the green lines, which are the top and the bottom of the profile on the charts themselves. I'm gonna pull that up really quick.
Okay, so the unfair high and the unfair low. Okay.
Yes, let me pull that up just to kind of make sure everybody understands that. And we're getting down into right now on the 240-minute time frame, the bottom of our profile right now. We're trading 2016. That inflection point's around 2017. So we've on the 240, we've closed in the profile. We're coming back and retesting it. Now, this is a great example, actually. If I'm looking at trading this and I'm looking at using that inflection point, I'm going to pull up my futures here on the scanner. And as you'll notice, it says bottom there. I don't know if everybody can see that. Got a little bit of delay probably on TFNN. So what's happening now is the price, the level of the market, real time, has come back down into the bottom of that short-term profile, 240. Now, if I'm using this really to the T, and I don't have a lot of information pre-market here to calculate my breadth, because remember, we don't have, all the stocks in the S&P opening. But as you'll notice here, a lot of them have opened, and you'll see that 60-minute now was trading 57% negative. But we don't have a lot of edge and breadth. We don't have the tide of the marketplace on our favor to therefore start stepping in and buying that inflection point, if you know what I mean, Dave. Like, it's not, we don't have the broad market saying, you know what, we're all happy and we're starting to trade above profiles more than we are trading below profiles, and we should be looking at buying support. I really don't see that right now, and I'm looking at our long-term breadth, and I'm kind of sitting there going, you know what, we've had a lot of things going on this morning. You can definitely take a shot at this inflection point, because these are even pretty powerful on a short-term basis. And by the way, I use the 240s a lot of times to regulate the trade from the long term. So what does that mean? I know that the long-term trend has kind of changed here. We've gotten into the balanced area on our weekly. I'm showing it right now. We've closed in it. Any retracements back up into 2045, as long as my weekly and daily stay either mixed up or both negative, I'm going to look at selling that 2045 area. And that 240, if you'll notice, has kind of been the regulator of that breakdown once it started happening below that 2063 and then 2045. So, we got a big DMZ up there at 2041, 2045. Guys who want to sit there and trade right now, I know you're going, well, Jesus, do I have to sit there and wait for the next opportunity for this thing to rally up to 2041, 2045? No, you don't. You got opportunities to sell this thing, in my opinion, based on that same principle in a breakdown situation below 2017. When we get up into this fair auction up in here, anything can happen. I mean, you could bounce around. The breadth's negative. Remember, if the breadth starts turning positive, For short-term guys, you can actually start looking at some of these shorter-term charts, the 60-minute, which is also reflected in the scanner. I'm going to go back into my futures section, and I'm going to give hopefully a more definitive answer to your original question by the end here, Dave. But you got the inflection points 2013, 2029 on the short-term 60. So we don't have any even short-term breadth turning positive right now. So I don't think you've got a lot of edge here. If we can get at least the 60s turning positive, I actually think you could buy breakouts on a short-term basis above 2029. Where's your target? 2041, 2045. This is short-term stuff, guys. For long-term guys, yeah. Do you have a question?
Question for you. So, what I'm looking at right now is the 240 or the 240 minute, or is that the 60 that you're looking at the moment?
This is the 60, and I don't normally drill down into 60s on this show because they're not even appropriate by the middle of the day a lot of times for people watching the show. So.
But wouldn't it also be your first trigger because if the breadth turns positive, it'll first reflect it on the 60, then carry it to the 240, then carry it.
Yes,
the day, and if the trend continues to the weekly, right? Am I thinking straight?
Yes, and that's a really good statement you just made because as you look at the scanner, and guys, you can put your favorite instruments in a portfolio in this scanner just to kind of keep track of when things are turning. And right now, we don't really see anything turning, and we don't see any green shoots here, even on the 60. It's just kind of gray or red across the board. You want to at least start seeing some kind of movement above profiles, or if the breadth starts turning positive. And listen, I've seen breadth turn positive as the futures are actually ticking down because the internals are kind of like there's a disconnect. I mean, so you can pay attention to that. Right now, we're pretty oversold. You've got 2013, 2014 as a place to play around with. As you can see, when we kind of got back into fair auction, it moved pretty quickly there. But, that's something to play around with. I'm not a big fan of trading against a long-term trend. I want to see, some changes here. So I'd like to see 60-minute breadth turn positive and us get back above 2029 to start thinking about buying this thing. We could go lower. I mean, a lot of people out there think sometimes when things go down so much so fast it's on sale. That's just not the case. You want to wait for confirmations. And my confirmation to go long here, even on a short-term basis, is 2029 above there. But again, guys who want to, sell some breakdowns, you got 2017 and 2014 rounded off here that are going to be some point of contention. If we break down below there, that's going to be another kind of situation on a short term where we could head lower. So the breadth calculation again is based on the internals, guys. And I'm gonna go back to something I was going to show a while ago. And by the way, guys, somebody's asking where do you get the software update for Taz? We're going to send out an email today, worst case tomorrow morning, for you guys to get the latest download. It's not going to prompt you to upgrade. We're going to have to send you an email because it's kind of like a whole new architecture that's going to do some different installing on your computer.
Could I ask you a question
let's go back. Yeah.
I saw in your commercial here just a second ago, you got a nice little picture of an Apple computer in your commercial. And I use an Apple. Do you guys have a version available so that will work on the OS operating system?
I think let me pull in a programmer here. Hold on. That's a great question. I think we need to get it answered. Let me pull in one of our guys who's basically CTO status. Let me grab this. Demantis, we're on the air right now, and I've got a question that I think only you can answer.
Okay, hello.
Yeah. Hey, Demantis, he's one of our main programmers, Dave, and he was really one of the driving forces in getting the front end to where it is right now. We've got another guy who completely works on the back end. But Dave's question was about Apple. He noticed that we have an Apple computer on the TFNN commercial. And I kind of wanted to know where that was and what his options are for using an Apple, so everybody else can hear this too.
For the scanner, right?
Yeah.
Okay, so we don't have a dedicated version for the Apple yet. If we might consider having that in the future, if there is demand, we will definitely, well, I wouldn't say definitely, but most likely we will be converting this current application using some kind of, converter Windows to Apple, which will not make it feel as native as it should on an Apple computer. What can you do now to have this on your MacBook? Basically, what you need is Windows on a MacBook, and you have a couple of options to get that. You can Google the tutorials or anything like how to get Windows on a MacBook, but basically there are two initial options that I'm aware of. So first one is to install Windows natively using I think it's called Boot Camp Assistant. The installation process is really simple. You just have to have the Windows disk. So that will give you a fully functional Windows on a MacBook, which then you can use to start your TAS products. Another option you have is, and I'm less familiar with this one, so I might be wrong in some parts of this explanation, but
wait. Are you guys are you hearing this, Dave?
Yes,
just
sir.
to make, okay, great. Keep going, Demands. Just make sure.
Okay. So the option that I'm less familiar with is somehow there is possible to have a virtual machine within your MacBook OS X operating system, which basically when you run an .exe file, so a Windows file, it simulates Windows environment for that one application. Now, I don't know how this gets installed on a MacBook or how it works. I can definitely look up some tutorials for you guys and just maybe email them to John so he can share with you. This might be a more delicate solution for those of you who want to have OS X running and then have scanner running. But then again, just keep in mind that this will not be native. It will be slower. It might have bugs or anything like that. So basically, this is the answer that I have for you.
Okay, thank you.
No problem. Is there any more questions? Would you like me to look up some tutorials for you, or?
No, sir. Just getting started in all this and trying to wrap my mind around it, because I'm very intrigued by a trading-based system that's objective, that's very objective-based, no emotion, and I want to use it as a backup to the trading system that I have now. So I'm just trying to kind of wrap my mind around it. And John's been very generous with his time this morning, and I really appreciate guys taking time to answer my questions. Thank you so much.
Awesome.
No problem. If you have some more time for this, for your trading, what do you use now on a MacBook? Do you use a specific platform and natively on a MacBook? Because what I'm aware of, most of the platforms run either better on Windows or only run on Windows. So I assume you have a Windows PC or something like that, no?
No, I pretty much use only Apple and the Thinkorswim trading platform, and the system is my brain as metrics that I look for.
Dave, I hear the music. Can you still stay on?
Yes, sir.
I hate to... Okay, yeah. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. I think we still got Dave.
Yes, sir.
Yep, and Demantis, who is one of the brainchilds behind the scanner.
Thanks.
He's the 0.0001% of it. I'm the 99.999. I'm just kidding. He's done a lot of great work with this, Dave, and I value his opinion highly. Let's finish with the MacBook thing, and then let me sum up the breath situation here. Or are we finished? Or
I don't know. I think we
might have finished.
Dave, do you have anything else to comment or ask? Basically,
No, it sounds like I've got to either load Windows on or buy an inexpensive Windows computer to run it on.
Let's do this. I will get your email or your contacts from John, and I will try to find an elegant and easy solution for you to get our products on your MacBook natively on an OS X without having to install Windows. Does that sound okay?
That would be, if you're able to, that would be awesome. More than I could ask for. Thank you so much.
Hey,
No
Dave,
problems.
Dave, Do you have my email address? It should be on the
sir.
TFNN site, and then I can just kind of figure that out.
No, but I'll get it off the. I'll go on the website there and get it there and send you an email.
Cool. Thanks, Demantis. We'll keep chugging along here for the next couple of minutes before the show ends, and maybe I can actually answer his question finally.
Okay, no problem. Thank you for having me.
Yep. You're welcome. Thanks.
Okay, bye.
And guys, Dave's bringing up this is a complex question, believe it or not, to read the breath and use the inflection points on the index. It can be a complex situation. I would love to do just a webinar alone on how to read the breath relative to trading futures and getting an edge on, in indices in general. So I'm going to, Dave, this is something everybody needs to know. And I need more time to really get into all these different time frames and what they mean relative to each other. So I'm going to ask TFNN to get us basically another webinar set up pretty soon. It could just be completely a question and answer session for hours as far as I'm concerned. But as we look at this, I wanted to go back to some specific dates. I wanted to, kind of go back to shorter term breaths are going to react a little quicker. But when the VIX is low, middle of August, we had a big sea change event, and then we kind of had that sea change event get completely killed from the short side the week of October 9th and some change there on the long-term weekly. So when I go to the daily, these reactions are a little bit quicker on the shorter-term time frame. So there's that, week of, that was around August 15th to 19th. I can't remember what Friday was there. But if you go back and look at the 60s and the 240s, they're going to react a little bit quicker. In a high VIX environment, you're going to lose some points just waiting for long-term breath crossovers to happen. In a low VIX environment, which is what happened back in the middle of August, they're all rolling over at the same time. The internals are telling you, you know what, we're not wanting to cooperate anymore with hanging in there on the long side. But when you go down into in the shorter term time frames in the high VIX environment like we're having right now, you've got to pay attention to those crossovers. And if you're looking at our profiles within the scanner on the futures section, you've also got to pay attention to these inflection points, just like we're having this morning. And Dave, if you want to talk about this privately, I really don't feel like I've totally answered your question. I really want to answer it. So feel free to call me, send me an email. I'll send you my number and we can keep talking about this, and we can definitely keep talking about it tomorrow.
Thank you so much, John. I greatly appreciate your generosity with the time.
Yeah, man, send me an email. Let's talk more about this. Thanks, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.